Hey guys, this is Market Update. In this video, we're going to look at the Bitcoin halving and how Bitcoin usually reacts around this event. Not usually very bullish for the price, actually. It's usually 6 to 8 months after this event that we get the real fireworks. The Bitcoin halving is essentially today, as of making this video. So it's a really important event because after today, Bitcoin's inflation rate is for the first time going to be lower than gold's inflation rate. And of course, we know that gold's inflation rate simply is around 2%, and if the price goes up they dig more out, and if the price goes down they kind of control it a little bit. It doesn't happen with Bitcoin's will be lower than gold's, and then in 4 years time it will go half again and half again and half again until eventually there is no more BTC. So it's a totally different asset than gold. It hasn't got really much in common with gold, in my opinion. It's far superior as a digital store of value. However, the Bitcoin halving isn't usually that bullish for the price. So we'll look at that in this video. As of right now, there's a lot of stuff going on, of course, in the world. And very simply, when that happens, Bitcoin and crypto sells off. It's not a flight to safety. Okay, crypto, Bitcoin is risk on, and it benefits from kind of good economic times. People feeling good about themselves, having money, and trying to store that value over time. When risk off happens in markets, I think we can very clearly see that Bitcoin is going to struggle a little bit. However, I think that's probably an opportunity for long-term investors. You know, if you're really actually looking to hold this over the long term, we can see in this video, I'll show you the data, that Bitcoin, has that outperformance. So for right now, the key technical level is essentially where we're at, which is, I think, is around 60,000 right here. You can see the previous all-time highs, the monthly candle closes. We are testing that now. If this stays as a support level, we've essentially flipped resistance into support. Super bullish if that holds. However, it's a pretty weak candlestick. We've reversed this candlestick. And I think because the ETF flows are slowing down and you've just got a kind of narrative vacuum right now, even with the halving, which, like I said, typically isn't very bullish. If you do trade though, Bybit deposit bonus, check the link down below, get up to 30,000 if you make a deposit on there and trade. Essentially, the ETF flows that came in when the ETFs launched are pretty much over at this point. So those who knew about Bitcoin and wanted to buy have bought it. And so now that sort of trade is done. And I think from here on out, you're simply going to have Bitcoin trade much like it did before, which is essentially be quite volatile. If there's any banking stress or failures, you'll get an initial sell-off. And then obviously the pump after the government sorts it out and prints a bit more money or shuffles things around. And so the ETF trade is absolutely been and gone at this point. Bitcoin's going to carry on as it has and normally trades. So let's have a look at some of that data. This is MVRV momentum. So MVRVZ is one of my favorite indicators to show overbought, oversold levels over the long term. This is the momentum of that over the short term. And you can see that in this bull market, and I believe we still are, that's a halving year. So this is typically where Bitcoin really goes to new all-time highs, right? Not just 70K, but much higher usually. As we can see here, the momentum, this blue line, as Bitcoin has these drawdowns and sell-offs within the bull market, it usually meets support around here. We're at this level again. So I think if this holds, you're looking for much higher prices for BTC. However, with everything going on, we could get one of those typical sell-offs of Bitcoin. We're around a 20% drawdown right now, which actually isn't big for a Bitcoin bull market. It's one of the biggest in this bull market, but not massive. So you can see the momentum. It's essentially an uptrend. These areas where the momentum, or the price at least, comes into that momentum line, so basically shaded in red, they're the perfect buying opportunities in a bull market. So it's all about how you feel about the market. If you're looking to accumulate, these sell-offs are something that, investors actually, want to look for and obviously make trades during those times. Because if you're looking to accumulate, trying to buy those sell-offs within bull markets is ideal. You can see the realized price, profit and loss margin as well, showing the same thing. So when Bitcoin has that expansion, everyone's in profit and everyone feels good about themselves. But if you're trying to accumulate the asset, you're just feeling pain because the thing is higher in price. When you get these drawdowns in the bull markets, you can see here, it's a good time to actually be active and try to invest. I still think because we're actually in the first half of this bull market, essentially it's being consistent buying at any price. Now, if Bitcoin reaches maybe 90 or above, 80 to 90,000 or above, that's when, a lot of people may say they're only going to buy dips at that point, because you don't want to buy on an expansion up to a certain price and then get caught out in a dip. So for right now, I still think we're in the first half of the bull market, so insensitive to the price. But of course, if you're trying to time things a little bit better, you actually want to look for these drawdowns in the bull market to actually be active. And you can see the ETF net flows right now. So more recently, essentially the ETFs are done, I think, for this point. What's going to happen really is we need some more narrative that's going to help Bitcoin out. Right now, the narrative is about, what's going on in the world, geopolitics and everything there. And so risk off sentiment. People don't want to, get into crypto and Bitcoin right now. The narrative has switched. Right here was the ETF narrative. That's where Bitcoin goes to all-time highs. That has changed now. The ETF flows have slowed down. The narrative has gone. But we can't invest in narratives. You can try to trade them. But if you're an investor, you actually want to be more active when the narrative shifts away from Bitcoin, because that's when typically the prices are a little bit weaker, which is great if you have that time to wait. The one thing we can't invest for is the unknown, something that's going to happen, a black swan. I think we all know what that might be this time around in this cycle. But obviously we know what's going on. And so a black swan would be some sort of huge escalation in tensions in the Middle East or something. That's not positive for BTC. BTC is not a risk-off asset. It's a risk-on asset. That's actually very good if you have a long-term mindset, because it outperforms everything else. I think there are three types of asset. You have risk-on, you have risk-off, and then you have the it's all going to hell trade. That one is basically gold up and oil up, which can't last forever. That's a scared trade, and that's not good to be in. You can't invest in that. Right, so for most people, you can't just invest in, I'm scared, and try and trade gold and oil. It just doesn't work, because they spike up and then they go right down again and they underperform. You have the risk-off trade. I personally believe the only risk-off asset in this world is actually fiat currency, namely the US dollar. Why? When you actually want to go risk-off, usually some banking crisis or something, then you need the money that you have to pay for your liabilities, tax, rent, mortgage, energy, food, right? That's fiat currency. That's actually risk off these days. That means that assets actually look like they're falling in price. What people are doing is getting into that thing that they need to pay their liabilities. And then you have the risk on trade, which is volatile, but risk on, Bitcoin, crypto, equities, they typically outperform over the long term. So if you're an actual individual person who wants to save the value of your output and your labor over time, then you have to invest in those risk-on assets, and you have to have a long enough time horizon to sit through some volatility. In fact, volatility is positive and good, because these drawdowns, when we get them, are great news to buy this good, strong risk-on asset at cheaper prices. We can see in this bull market as well, the drawdowns have been nothing compared to previous bull markets. These are bull markets only. We broke the all-time high, maybe we get big drawdown. That would be typical. A 30% drawdown is more than typical. It's not even like a big drawdown, it's a typical drawdown. And so they're actually opportunities that we have to go for. We can see here as well, this is Bitcoin price performance since halving. I just want to highlight here, we're at the halving right now, and Bitcoin for a month or so, usually in every previous halving, doesn't do anything. It pretty much goes sideways to down. And so that's what we're doing right now as well. And so, very typical. It's actually after that we may get the big moves upwards. This is really great as a chart as well. So what this guy did is put every single halving into one chart, the kind of average of them. And as you can see here, for 5 months after the halving, the average performance is essentially sideways. Nothing really happens. It's only after the 5 month mark that you start to get some real positive outperformance. So the halving is a big event for the long term, but we know that Bitcoin's supply is capped. For right now, the price action is similar to what's happened in previous halvings. Bitcoin and crypto is just a volatile asset class. 70% down in bear markets, 30% down in bull markets is actually standard, and you have to go through that. But the real trade, the actual trade for BTC is how much can I buy and how long can I hold it for? Because the real trade is Bitcoin actually becoming a large worldwide asset class. And now that the institutions are bringing it on, That's happening. And so to go from 1 trillion, or Bitcoin's around $1.2 trillion right now, to go from that to being, large worldwide asset class, you're looking at kind of these as a first step, right? Gold at 12 trillion, art at 18 trillion, cars, collectibles at 6 trillion. You're looking for Bitcoin to just take a little bit out of all of these asset classes. Maybe wealthy people don't buy 5 rental properties. Maybe they buy 3 and put some into Bitcoin, right? Maybe some equities comes into BTC, some arts and collectibles, and definitely gold, some of that coming into BTC. So I don't think these are going to go down in value. These will all go up in value because most assets go up in value versus dollars and other fiat currencies. But Bitcoin just outperforms to grow into the size that it should. And 1.2 trillion certainly is very small in the big scheme of things. And so that's the real trade for me, is buying, getting a big portfolio, or as big as you can for every individual, and then waiting for as long as possible for the growth, the natural growth to actually occur. So maybe a bit of weakness and choppy trade over the next 3 months would be totally normal for BTC, but not a big deal in my opinion. If you do trade, Bybit deposit bonus down in the description. Check out the crypto investor course as well as 300 videos there on getting set up in crypto, and private Discord groups as well, link below. I'm James, this is Manzi G. Cheers for watching, and I'll see you in the next one.